And today's tip of the week is how to calculate appreciation in a specific community.
Yeah, so we've been thinking of a way to demonstrate this to everybody out there. And what we do, I noticed Tim was actually on the computer yesterday all day working out numbers for tonight's presentation. And we simply go off the SDR, Cruise SDR formula. And what is Cruise SDR formula? It's simply
It's the supply-demand ratio for each community. Now, what does that mean in plain English? It's the number of active listings that are available for each specific buyer within a community. Now, when you go on realtor.ca, the numbers there are kind of misleading. And why is that?
Yeah, so the numbers are misleading because most of those, not most of those listings, about 1,000 of them. So when you guys go on realtor.ca, about 1,000 of those listings are already pending. We can tell you today, there's just over 2,500 active listings. And out of those 2,500 active listings, 1,000 of those are condos. So it's very, very stressful if you're looking for a suited property or, Tim, just regular houses right now, just because there's not enough inventory.
Yeah, so, and if you drill that down to a specific community, you may see 30 active listings in Acadia for this month, but in reality, 10 of those are under contract, so you only have 20 active listings. And then to determine if that community is going to go up, if it's going to appreciate in the future, all you have to do is look at its historical level of listings. And if you see that normally there's 40 to 50 active listings in Acadia in any one month, with only 20 this month, demand is very, very high. Supply is very, very tight. So what that means is you're going to see appreciation in the future.
Yeah, so for all you investors out there, the SDR, the supply-demand ratio is crucial. And when we say crucial to understand, and this is what Tim and I do every day, more Tim than me, I got to be honest. And Tim's doing this every 2 to 3 months because we need to understand where the market is shifting in any community in Calgary. And when we say this, we know for many years, Tim, we weren't investing in condos downtown. And why was that, Tim?
Well, because there was an oversupply issue. There were so many resale condos for sale in downtown Calgary that it was killing rents, it was killing prices. And the investors that were down there, they were just in a cash flow negative position for years.
Yeah.
But over time, when they stopped building new condos for the last 5-6 years, we're seeing the supply shrink. And now the SDR ratio is very, very favorable for the sellers.
So, Tim, what's going on there is property prices are coming back. Yeah. These condos were once bought in newer buildings, say 2010. They were once bought for the 450 range, and they went down all the way to 330,000, and now they're back up to 380, 390,000, and we're seeing people sell off because their mortgages over a 10-year or 13-year period now, Tim, has dropped below the 380 range so they can get out and not lose that amount of money. So the SDR, the Cruise SDR supply-demand ratio is really, really crucial for any investor wanting to get into the market. That's what determines if a community is going to appreciate or not. And Tim, sometimes we stay away from newer communities because we know how much supply is coming onto those communities. And we know that they're the first communities to get hit, and people that are speculating on buying in there, property prices go down.
Yeah, and that's with a ton more inventory coming on. There's not enough buyers out there to absorb that inventory. So in the future, when people go to resell those in 2-3 years, their prices are below what they paid for them. So that's a new community.
Yeah, for sure. So if you haven't subscribed to our Crew TV channel, it's all about tips like this. We hope you like this one. And if you want to see more, just subscribe below and you'll see in more depth what we're doing tonight, Tim, on supply and demand ratios.
All right.